What's up, what's up, what's up, what's up, guys? Alright, I'm going to do a video today. Hey, what's up, Chadfire? I'm going to post this video later. I'm actually just going to look at charts today. Going to look at about 20 different companies, and I'm going to look at their charts and see, what's going on with the stock market. I got an email, so I'm pulling out this list of stocks to look at. I think I'm going to just go A through Z. Everything is getting hit today. The Dow is down about 300 points right now. No, the Dow is only down about 200 points now, so we've been rallying back. So let's look at a couple of charts. Actually, let's look at the broad market. All right, right now you're looking at the YM, which is the Dow. Earlier, I explained that right here you have a trend line. We broke this trend line. We came up here. We hit this resistance level. We got an arrow, and it looks like we broke this bear flag pattern. This bear flag pattern. So if we close today underneath this support level, which it looks like we're going to do, I expect stocks to fall probably down to this level, which it looks like it's 15,285 on the YM. That's 15,285. All right, so let's take a look at the ES, which is the S&P 500. All right, if we look at the S&P 500, why don't I have any thing on here? All right, let's draw some trend lines so you can watch me do it live. Looks like we have a trend line here. Looks like we have a trend line there. Looks like we have a channel here. All right, looks like we hold on. All right, everything was red here. We got a red arrow. We've been selling off since the beginning of the year. We got a hammer here. I started buying stock again once I saw this green arrow here. This is the 20-day moving average. This is the 50-day moving average. This is the 200. So you're going to see it on every single chart that we look at today. This is day charts. So this is for my swing traders that want to buy and sell stock. What are we looking at? All right, well, we broke this channel on the S&P 500, and it looks like if we form a red candle today with this red arrow, we can go lower. If you're looking to buy stock, you probably want to buy it right around this level here, around the 1800 level on the S&P 500. You can buy the S&P 500 in stock form. You can buy it. The ticker symbol is SPY, which is the spiders. You can also buy the Dow Industrial Average in stock form. You can buy it. It's the DIA. The S&P 500. Let's see how much each share is. The S&P 500 right now is $185 a share. The Dow is $160 a share. All right, let's look at the NASDAQ. The NASDAQ, I think, got hit the hardest so far. The NASDAQ consists of all of our tech stocks. Your Amazons, your Googles, your Apples, your eBay, your Netflix. It's been getting pummeled. So let's look and see what the charts are doing. I don't understand why I don't have any trend lines here. Must be looking at the wrong charts. But if you notice here, we hit the 20-day moving average. Just about every single ETF is doing the same thing. The S&P 500, the Dow, and the NASDAQ. We're hitting this 20-day moving average. We break out of this bear flag pattern, and it's off to the races down. Now look, this was the low. This was the low that we had January 20th. The NASDAQ is now lower than our low. So this is the lowest that we've been this year. If I go back and I look at the chart back in August, it looks like the low in September of last year was right around the 4,040 level. And yeah, that was way up here. So we are at the lows for like the last, looks like at least 26 weeks, 30 weeks. So I'll have to go back and look and see if it's a 52-week low. But the NASDAQ right now is right around 39.49. We did bounce at 38.85. We have no support underneath us, guys. What does support mean? That means that if the floor underneath you that you're walking on, if you're in a condo and you're on the 5th floor and the floor, you know, disappears, then you know you can at least fall down to the 4th floor. Well, right now we don't see a 4th, a 3rd, or a 2nd floor right now. So the market can really fall from here. Let's see, 39.01. Well, it looks like we're at support here. Looks like we had a low right around this date. Looks like 39.08. That's right. So let's 39.08. Let me make sure that's correct. 39.0825. Let me make sure I put a 39.0825 was the low. We're going to make that bigger. I'm using the Thinkorswim platform to show you guys charts. And I'm going to make that a little bigger. Make sure that shows. All right, looks like 39.0825. Let's look at where we're at. Okay, so we did hit support. And we did bounce a little bit. What does bounce mean? Well, we hit that support like a basketball. And we bounce. So how high do I think we can go? Well, we're going to draw a trend line here on the outside until we break this resistance level. And there are a couple of ways we can break it. We don't have to break it immediately. But as long as we, if we can go sideways for a while, we'll also break this particular trend line. I'll make that bigger so you guys can see it. But on the NASDAQ, if we break this trend line here, we can try to get up here to this 200-day moving average, which I think that's where we want to go, at least by the end of the year. But for now, it looks like the NASDAQ broke this support here, so we're at the secondary support. So if we were on the 5th floor, we're at the 4th floor right now, and if the 4th floor gives away, we can fall pretty hard. But what I think will happen is I think we'll hit this, we'll come back down, we'll hit this, we'll come back down, and then there's going to be one day. It looks like we can probably fit about 1, 2, 3, about 4 days here. Maybe by Friday, we'll figure out if we want to go up or if we want to go down. So that's the NASDAQ. So let's look at a couple of stocks before I have to go to take my sons to basketball practice. All right, looking at Amazon. Amazon's chart looks terrible right now. All right, we did have a low at 204. You guys can't see this on Periscope, but it looks like we had a low at 204.30. So that should be a level that you guys are looking at if you're thinking about buying Amazon. That's 204.30. If I were to purchase Amazon, that will be the first price that I look at. 204, is this right? No, that's Illyrian. Amazon is AMZN. I am making a mistake. Hold on. Okay, this is Amazon. As soon as I saw the price, I was like, hold up, that can't be Amazon. All right, this is Amazon's chart. All right, this blue line, remember guys, the blue line is a serious line. All right, the blue line is the 200-day moving average. You're going to see it on every single chart. The yellow line is the 20-day moving average. The red line is the 50. The 200 is the strongest. The red line, which is the 50, is the second strongest, and the 20 is the least. But they're all important. As long as we stay above this blue line, Amazon was bullish. As soon as you break beneath the blue line, it becomes bearish, and then the 200-day moving average becomes a resistance level, meaning that we can't break through it. Now, I did just do a video this weekend on support, resistance, and trend lines. So if you're confused right now, you might want to go and take a look at that particular video so that you can get a little bit of understanding on what support, resistance, and trend lines are. But for now, it looks like we broke through the 200-day moving average, which was right around the $538 level, and now Amazon is $488, and it looks like we have some support around this particular value. It looks like here, which was September the 29th of last year, we had a low around $490.50. And I'll tell you guys where we're at right now. It's $490.50. Let me all right, that was $490.50. Right now we're at $488.10, and we're trying to get back to that $490 level. Now, stocks usually overshoot. So what do I mean by that? That means if we have a support level at 490, sometimes we break through it just to scare everybody, and then the next day we'll stay above that support level, and then, you know, it's just a scare tactic. We overshoot to the upside and we overshoot to the downside. It looks like we might overshoot to the low side. What you want to look for is a hammer, and a hammer looks just like a hammer. You want the stock to push down, but you want it to close up at the very highs, and that will form a hammer. Usually when you see a hammer, like this is a hammer right here. When you see a hammer, that usually is that usually changes the direction or changes the trend. And if you notice, we were going down, we formed a hammer here. We went up. There's also reverse hammers, like that's one right there. But looks like Amazon, looks like this is a good time to buy if you want to buy it. This high right here that you guys can't see is $696.44. We're at $480 right now. All right, let's look at Berkshire Hathaway. If you don't know what Berkshire Hathaway is the company owned by Warren Buffett. I strongly encourage people to buy this particular stock, seeing that he's one of the richest men in the world. And it looks like Berkshire Hathaway way underneath all of the moving averages, the 200, the 20, and the 50. Right now, Berkshire Hathaway is at $123 a share right now. And you know what? I'm gonna look at a month. I'm gonna change this to a monthly chart so that we can get a better view of what's going on with these stocks. We were looking at a day chart. I'm gonna switch to a monthly chart. And if you notice, we have some support right here. Why did I choose this point? Well, it's the closest to where we're at right now. So here we went low and then we went high. So I want to look for that day or that month that we changed course. So looks like right here the low was right around 122.72. 122.72. 122.72. Now Berkshire Hathaway is a $120 stock. I strongly encourage people to buy it. I know a lot of people that own it. But it looks like we have some support here. Let me draw a trend line. And you guys need to watch how I analyze stocks as well. Even if you're not interested in this stock, this is what you guys should be doing for stocks that you are interested in. Where's the extension? Can't find it. Huh. Interesting. Whatever the case, this is the trend line. It's not perfect. I'll go back and make it perfect. This is support. This is a trend line. If we get down to about this level, if you haven't bought Berkshire Hathaway yet, you definitely probably want to purchase some at the 122 level. How far can it go down? Well, we have a Please don't tell me that my charts just froze. I think my charts froze, guys. But anyway, the looks like we have an arrow here. We might break here. Looks like we have a low at 114. We have a support level at 114.83. 114.83. We have another support level at 108.12. 108.12. And 114.88. All right, so if you're looking to buy, dang, that didn't show. Hold on, 114.88. Now on the Thinkorswim platform, once you plug in these values, it will stay. I mean, it pretty much saves it. So as long as I'm going through stocks, it'll save it forever until I go and change it. So a year can go by and these lines will still be here. So I love this particular platform. So that's Berkshire Hathaway. Let's look at, we're in the B's right now. Let's look at Chipotle. CMG. All right. Looks like, I cannot move the charts, which sucks. Maybe I need to go back to the day chart. Oh, that's why. It's 4 months. Change that. Let's go to 10-year month. All right. There we go. All right. Looks like Chipotle. Chipotle looks like we have support at the $400 level. Right now we are at 445. You guys can't see that here. Maybe if I make it bigger you can. But we're at 440. We're at 445. The high for Chipotle was $758, which was here. $758, which was made August of last year. So August of last year, Chipotle was a $758 stock. It's now 445. So there's a lot of room to the upside, but there's also a lot of room to the downside. Looks like we have a low here, which is $233.82. Hopefully we don't go that far down. If we do, I'll buy more at $233. I believe Chipotle is a great company. If you've ever eaten there before, it's always packed. All right, let's look at Disney. All right. Disney has a support level at $90. We are at $92.12. We did drop to $89 today, and I got an alert, and I was like, I didn't have money or funds available in my account to purchase it, so I was really angry. But $90 for Disney is an excellent price. I believe the all-time highs is $122 a share. We're at $90 a share right now. We can drop to this other support level here, which is $78.54. So I'm going to place another line down there. I'm not going to, just going to draw a line there just to show you how far I can go. We did start forming a red candle, which is not good. We did not get a red arrow yet. We still have a green arrow. So if we form another red arrow somewhere in this area, then that might not be good for Disney. All right, let's look at gold and silver. I've been telling you guys to buy gold and silver for the longest. Now, if you notice and you look at this chart, I've been telling you guys to buy gold because look at how far away, well, look how much gold has come down in the past 6 or so. Wait, what was the high? The high was in 2011. So 5 years ago, gold's high was at $185 a share. We're at $113 right now. We still have room to go to here. I mean, just to this point here is $133 a share. Now that might not seem a lot to you, but $20 a share, if your stock is $113, and you want to make another $20 per share, I mean, that's another, what, 10, 15% to the upside. But all the way to 185, that's $60 a share. That's almost a 50% return from this point all the way here. And I mean, we just started going green. So all this red, all this red, all this red, hopefully we can get a couple of green candles to get to this point. So you can probably ride it at least to this point, which is $130 a share. That's gold. And you can buy it in stock form, which is the GLD. All right, let's look at silver. Silver has the same chart. Silver has a lot more upside. Silver right now, we got a lot of green arrows, but it won't go up. But silver's high was at $48.35, close to $50 an ounce. And we're at $14.50 an ounce right now. So our highs were $50. We're at $14 right now. The low is the low of silver for the past 8 years was $8.45. This is why I tell you guys you probably want to start buying a lot of silver. The lows again were $8.45. So that is $6 from where we're at right now. So yeah, you can lose 50% of your you can lose 50% of your investment if it drops down to the lows. But I mean, if you go from 14 to 48, that's almost what, a 300% return. So 300% return upside, 50% downside. So that's a great risk to reward. So I would definitely be buying silver at this particular time. All right, that's gold and silver. Let's look at let's briefly go through some other tech stocks. We have Google. I'm not going to draw anything here, but it looks like we had a resistance level up here. The high was $789 a share. We're at $682 a share right now. So if you just have $1,000 to invest and you want to just invest in one stock, Google looks like a great bet. Let me draw a trend line here. We did break the trend line, so we may fall a little bit further. We can probably fall all the way down to $600 a share. So you probably have $82 a share downside and about $100 upside. So that's that's almost 1-to-1, which is still a decent risk to reward ratio. All right, let's look at some. That was Google. Let's look at my favorite stock, Tesla. All right, Tesla broke support today, which is not good. We formed a double top. What's a double top? That means if we have a resistance level at the all-time high, which was $291 a share, look at what happened. We came up here, we hit the high, we came down, we came up, we hit another high, and we came down. So what happens in a double top or a triple top? Well, usually, if we can't break this resistance level, we're going to go lower. So it looks like we broke support today. Well, not today, but we broke support over the last month. The support level was $177 a share. We're now at $147 a share. I mean, Tesla has been getting smoked. Now, Tesla is coming out with their earnings this week. So the only big support level I see is down here at $116 a share. So if you're thinking about buying Tesla, the $116 level looks like an excellent place to buy Tesla. Tesla's been hurting because oil prices are down. China was a big purchaser of Tesla vehicles, and with China going through the same real estate crisis that we went through back in 2008, people aren't just buying, electric cars are luxury vehicles. So around the world, it looks like the production of Tesla vehicles, the growth of the company is not growing as fast as as people believe it is. Now, Tesla does look like they're going to sell more cars this year than they ever have, or this particular quarter. But stocks are determined, the price of a stock is determined on how much a person will pay for it. So when everybody is panicking, they're not, they're going to go to the first stocks that they made a lot of money from, and they're going to sell those stocks first. It looks like Tesla is one of those stocks, high growth stocks that's getting beaten down right now. So $116 looks like a great level that you can probably buy Tesla at. The next support level is like $40 a share. Can it go there? Most definitely it can go there. But right now the scary area looks like the 116. If it gets to 116, I'm loading the boat. Like, I'm going all in. We get to this 116 level. And if we drop lower than that, then so be it. The world must be coming to an end. But the 116 level, which is another $30 a share, looks like a very, very, very strong support level for Tesla. All right, let's look at Under Armour. I was upset about Under Armour yesterday because they did sign Cam Newton, and Cam Newton lost yesterday. And he didn't want to talk to reporters afterwards. I'm like, come on, man, you're hurting my stock. But looks like Tesla on a monthly basis. Look, we formed a big hammer. You see this hammer? That's like one of the biggest hammers I've ever seen for a company. But when a hammer forms and all of a sudden the hammer looks like it's going to fail, if we break below this hammer, this stock can fall like really hard to like the $45 level. We're at $72.56 right now. And Under Armour is down 6% today. So we're sitting at this particular, this is like a backwards trend line. You don't ever want to buy on the back of the trend line, but it looks like if we can go sideways for a little while, we'll continue to go back up. The highs for Under Armour was $105 a share. We're at $72 a share right now, and it can fall probably all the way down to $45 a share. So that's Under Armour. Let me look at Facebook right now. Facebook, one of my favorite stocks. Green candles everywhere. Green candles. Facebook doesn't even... Last time they had a red candle was back in, October 2012. So this stock has been No, my fault. The last time we had a red candle was back in, and that's for the month. That means a down month. Was back in June of 2013. So everybody loves this particular stock. And actually, I was wrong about that. I have I have the John Carter up right now, so this shows momentum. So we've had down months. But as far as the momentum trade, we haven't had a red candle on the John Carter momentum train since 2013, which is great. This stock has just been going up, 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 up and away. So this is another great stock. The highs were $117.59 a share. Right now we're at $99 a share. So we have some good stocks that we're looking at. Just like you want to do these trend line support and resistance levels to analyze your stocks and to figure out exactly what price you want to get in at. But this is what I do every day. This is how I analyze stocks. I don't just get in a stock because somebody at the barbershop told me that it was a good buy. Now, do I listen to what stocks they're talking about? Definitely. But I come home, I put the stocks on my chart, and I look at them and I say, okay, if I'm going to buy this particular stock tip that somebody gave me, where do I want to buy it at? It's just like if I was searching to buy a new car or a new shirt or a new house, I'm going to do some research first. I'm not going to go out there and buy the first house that I see. Now, have I done that before? Yes. But, I'm going to put a little bit of research behind it if it's an investment. If you're buying it for the love of it, most definitely. If you want to buy Disney because you want to be an owner of it, if you want to buy Ferrari because Ferrari stock just because you want to be hip and have a cool stock and not worry about the price, then definitely do that. But if you want to treat this like a business For your other stocks or your other investments, you have to learn how to do trend lines. You have to learn support and resistance levels. Now these are the basics. There's a thousand. I mean, there's thousands of strategies out there that can teach you how to buy and sell stock, but they all have the basics. You got to know the support levels, the resistance levels, the highs and the lows, where the stock has been, where the stock is going, uh, what the market is putting a multiple on it. So if they put a multiple on how much it's going to earn in a certain amount of time, you get to understand how the hedge funds think, and then you put that level at where they say they think the price is going to go, and then depending on where you're buying at, you'll know about how long it will take to get to that level if it gets there. And if you're going to make a 10, 20, or 30% return, you'll know your downside, your upside. But you need to know all of these different things when you're purchasing your particular stock, not just buying it and saying, okay, make me rich. Um, which is cool if that's the take that, if that's how you want to take it. But most people aren't that way. They'll buy Apple, and they'll buy one share of Apple, and they think that it's gonna pay for their kids' tuition in college in the next 20 years. And Apple can't grow that much. Even if it grows 4 times the amount that it is right now, that's still not going to make you a millionaire. You got to learn what stocks have growth, what values it can go to. This is the homework that you have to do on your own. So I'm going to go ahead and get out of here. I got to leave in about 5 minutes. And hopefully this was educational to you. Uh, if not, you can go you can go to my website at whatwouldjoeldo.com. I do have a couple of videos that teach you how to read charts, teach you how to analyze stocks. I go through a couple of platforms that you can use to get started in the stock market. I try to explain the difference between stocks and futures, and that's about it. I'm gonna go ahead and get on out of here. Peace out, guys.